Continue to be a stress point. We have Mr. B Sriram, the MD and CEO of the bank, joining us now on the show. Thank you so much for joining in on ET Now. Seventh consecutive quarter of losses for IDBI Bank, although the loss figure has narrowed this quarter on a sequential basis. Still, provisions continue to remain high. So what, according to you, is the reason for that?
See, loss is a consequence of the sort of a stressed corporate book that we have, and we have been running that, in some way we needed to manage that over the quite a few quarters. And almost, as you rightly say, quarter on quarter, the credit costs on account of the stressed book is something that is, eating into our profits. While the operating profits and have been reasonably good in spite of, as I said, the increasing stress and increasing NPAs, we are trying to improve margins and keep the operating profits at a decent level. However, the provisions and the credit costs have been quite high. And from a book of, say, 61% of corporate book, which was there last March, we have actually come down to almost 53% of the total book on the corporate side. So as we go down and as we try and manage and provide more and more, we would be in a better position to manage the losses as well. So I think it will require some more time because the nature of the book was such that the corporate side was it's heavily tilted in favor of the corporate side. And due to circumstances that all of us are aware, I think a large number of accounts did turn non-performing, and there is a time that is being taken in terms of trying to address through the NCLT route and other routes that resolutions that are happening.
All right, fair point. But, if we have to pitch IDBI Bank's own NPAs and stressed assets versus the rest of the banking industry, IDBI Bank has one of the highest in terms of NPAs. So how much more, firstly, NPA recognition is yet to be done in terms of stressed assets, including NCLT accounts? And could you give us a broader picture on the entire stressed assets recognition by the bank so far?
So there are 3 or 4 things that I would like to mention here. One is, of course, the percentages sometimes are a factor of how the denominator looks like. Like, for example, the NPL ratios, while maybe we would probably be trying to address the NPLs formation over the next couple of quarters, but largely depends also on the way the loan book grows or decreases in growth because of the issues that we have with corporate lending. There is an embargo on that, and we have actually been reducing our credit risk weights substantially. So that is one factor, but largely I would imagine that as we resolve and as we provide more and more, we would be looking at a reduction in the NPL ratios as well. The second part is, of course, the area of how much of capital and how much of space do we have, both for provisions as well as for growth. And in that sense, I would imagine as we go into the second half of the year, the transaction which is being proposed with the LIC will probably be bringing in significant capital for us to support the bank and try and address some of the concerns that are there on that. The third one is, of course, in terms of formation of NPLs. Today in our SMA book, we are actually at about total SMA book is about 7,600 crores, and if you remove the SMA 0, which is largely transitory in nature, the SMA book is about 5,700 crores. So we have come down substantially from about 10,000, 11,000 crores a couple of quarters back to this figure, and I would imagine that even the formation and the end of the recognition cycle will probably be there in 1 to 2 quarters.
Okay, so if you could just quantify all of that, where do you see your gross NPAs, provision cover, slippages run rate by the end of this fiscal, and any recoveries that you're targeting for this fiscal?
Slippages, as I have said, the SMA figures I have said, and largely we will have to manage the slippages on those numbers that I have mentioned. As in far of the provision coverage, we, as I said, we are at 64.55, and our intention is to push it up on a quarter-on-quarter basis towards the 70% mark. On the provision coverage, without the technical write-offs as well, the intention is to cross the 50% mark as early as possible. In terms of NCLT cases which are admitted, our provision coverage is about 73-74%, and whatever gains that we could get by way of write back, we would make more provisions on some of the other accounts that are there. In terms of gross NPA numbers, it is difficult to estimate today, purely because, as I said, it is factor of both the NPA levels as well as the credit growth. And today we are in a situation where we are actually trying to reduce the risk weight assets and manage the capital much more efficiently than what we had done earlier. So around 55,000 crores of risk weights assets have actually been reduced over the last year.
Okay, and I must touch upon the subject with respect to you being the MD and CEO of IDBI Bank since June, but now LIC is going to become the majority shareholder. So is there any communication from the government regarding your tenure at the bank?
No, there has been no decision on this so far. So I am unable to comment.
Okay, fair enough. Two questions. Firstly, when can we expect the bank to turn the corner and report profits? And secondly, how much capital would be required by the bank, by the end of FY19 for there to be an impact on the capital ratios?
No, it's difficult to predict on both these questions. One is, of course, the capital depends on what sort of decision is taken on the mode of acquisition of 51% by LIC, and the decision will depend, and it all depends on how the transaction goes through. So, but I would imagine that there could be some clarity in the coming quarter on that, as well as in terms of when and how much the capital comes in. That will also give a clear view on how fast we will be able to provide for the credit costs that are there, and how fast we should be able to turn around. So I would imagine that maybe another couple of months we should have a very clear direction on both these counts, and we would then be in a position to come clearly with certain numbers.
Okay, fair enough. I have to go back to the topic about LIC becoming the majority shareholder, because it certainly would change things. To help our viewers understand with LIC infusing capital, etc., what according to you will be the most material change for IDBI Bank at the operational level, at the managerial and the decision-making level, and also on a broader strategy level?
I think there is a very clear win-win situation for all the stakeholders involved. Capital is one thing and very important for us, but apart from that, I think the synergies that can be built between the two institutions is substantial and significant. One is, of course, the retail reach of LIC together with their they're bringing to the table of their the mass amount of customers that they have by way of policy holders or the broker network can be easily leveraged to by the bank to try and sell and cross sell various products for the bank. Even if you see some of the captive business that LIC gives accords to various banks, if they could be consolidated in terms of even some of the cash management that is being provided by banks, that will give us significant incomes flows not only to the bank but also in terms of making sure that LIC does a little bit more efficient, becomes more efficient in looking at their accounts with one single bank. In addition to that, I imagine that the workforce of IDBI, which is extremely young and and professionally qualified is something, and with the new gen branches that we have, I think it's very important that the LIC bringing in their synergies would help these youngsters to in their, not only in making sure that we deliver to what the retail requirements are, but also making sure that the growth of the bank continues.
And we wish you all the very best as the bank undergoes this major transition, a very crucial one as well at that. Thanks so much, Mr. Sriram, for joining in.